Welcome back, and joining me for a closer look at what's playing itself out in the market scene is Imtiaz Suliman from Sentio Capital. Thank you so much for your time, Imtiaz. Imtiaz, what have you made of the market reaction and sentiment on the back of the September non-farm payrolls?
Hi, Zanati. Yeah, I think on Friday what we saw was a much stronger non-farm payrolls number. Unemployment came down from 4.2 to 4.1%. And on the back of that, we've seen expectations for another jumbo Fed rate cut of 50 basis points dissipate. So the market is now only expecting two rate cuts of 25 basis points each until the end of this year. And that put a dampener on some of the market expectations for further, high-end rate cuts that are much faster. So we've seen a culmination of that. It does show that the jobs market is still quite strong in the US. Whilst that is good for consumer spending and consumer sentiment, it's not that good for inflation necessarily if wage growth starts to pick up meaningfully again.
All right. Well, Imtiaz, let's go into the specific company news that came out of the JSE today, starting off with Richemont. Of course, it did come out with an announcement that it is selling its stake in Yuke's Net-a-Porter. What are you making of this deal?
Yeah, I think it's been a bit of a long drawn-out process with Richemont. They did try to sell this operation in the past to Farfetch,
Yes.
and that didn't materialize. So the online business has been a bit of a difficult space for Richemont, and I think selling luxury goods online, is not as a attractive proposal as for someone coming into the store, buying a luxury goods, whether it's jewelry or a watch. Spending 100, 200,000 euros online is just not the same. And therefore, Richemont always struggled with this online operation whereby it made losses for a long while. So they are selling it to another online player, MyTheresa, which has experience in this space. And hopefully they can make a go of it. Although this will complement Richemont's strategy whereby they'll sell their own brands directly and some of their product through this enlarged platform, which, you need a lot of scale in the online space to really grow revenue and margins.
All right. Well, let's go into ICT because Datatech came out with a 6-month trading update today, saying that it's seen improved performance across all its division, saying that they expected their headline earnings per share to climb as much as 74.6%. That stock did climb over 4% the last time I checked. Pleasing numbers here?
Yeah, I think overall a strong set of numbers. Datatech has gone through a number of corporate actions over the last while, trying to realize value with the sale of Analysys Mason, Westcon Americas in the past, and management is incentivized to unlock value. We've seen the shares trading at very undemanding multiples, so trying to unlock some of that value by selling some of the assets, growing organically, and we've seen that come through with the strong earnings number that they've announced.
Well, as you're talking about undemanding multiples, there's something that was in demand today is Calgro M3 shares, because they released an interim trading statement. No detail at all, but what we do know is that they expect their bottom line to rocket by as much as 33.54%. Of course, we saw that shares surging 15%. Is this underpinning huge investor confidence in the stock?
Yeah, it's one of those counters that is a small cap counter, so liquidity is a bit of an issue. But we've seen, a strong underlying result. Revenue wasn't as great, but we've seen gross profit margin grow, and on the back of that, earnings grow quite strongly. They do have a strong pipeline in terms of developments, and if they can execute and deliver on that, I think it would be quite positive. They're talking about another housing development of 20 to 30,000 units over a 15-year period that would add significantly to their revenue. But underlying the whole investment thesis for Calgro is that there's a strong demand for low-cost housing, and they play very nicely into that space, whereby they build and deliver low-cost housing.
Well, sticking with a property, another REIT that released a half-year trading update is Sirius Real Estate. The company is saying that it is performing in line with expectations, seeing organic growth and also growth from its acquisitions. And the company seems optimistic about its future. How serious can investors get about the stock?
Yeah, I think they've got a good positioning in Germany and the UK where they are operating in. We've seen, rents up almost 15% on a like-for-like basis. That was up 5.5%. So there was some acquisitive growth in that number, but nonetheless, transaction volumes in terms of property transactions are starting to increase. We've seen property values move up on the back of lower bond yields and increased demand for property after the COVID period, whereby property was hurt quite significantly, and office parks again are coming back into vogue. So I think there is demand, and if you find an operator that can unlock value of the assets that they manage, like Sirius is well positioned, they should benefit from that going forward.
All right, we'll talk about benefits. Let's get to your stock pick for today, Imtiaz.
Yeah, I'm going with MTN. I think if you look at MTN, it's all about them unlocking some value in the Nigerian operation. We've seen them renegotiate the leases for the towers with IHS, which would reduce some of the reliance on a dollar cost component and bring some of that to local currency, which would benefit their margin. And then I think if you look going forward, we've seen Nigeria growing strongly both in terms of data growth and data revenue, while South Africa is stabilizing with lower costs from load shedding and generally data still picking up. So I think overall, you've got the dividend that will continue to grow and earnings will grow quite significantly ahead of dividend growth.
All right. Well, thank you so much for your time and for your insights. The Imtiaz on what has been moving investor money today. That was Sentio Capital's Imtiaz Suliman.